So we are back for our next session. I hope everyone else has freshened up. We've taken some coffee. Yeah. So welcome, Peter, our tax partner. We'll be talking about the recent tax litigations for the next 30 minutes. Welcome.
All right, so thank you very much, Anne, for the introduction. For the participants joining us now, my name is Peter Monja, as I introduced myself. I'm the tax partner known as LNP. And I want to take you through the recent tax litigations that, in our opinion, felt that they will affect SACCOs. And the reason why we want to do that is because when addressing tax matters, we rely on two things. One, we rely on what the law says, okay? And then secondly, we also want to look at the precedents or the rulings that the courts and the tax appeals tribunal have made, because most of the times those rulings also form a precedent. Right? So we cannot talk about tax matters without looking at both the laws and how the courts pronounce themselves on certain tax issues. And I want us to look at a number of cases. One of the cases was between Cooperative Bank, that is Coop Bank, and KRA. We know Cooperative Bank is not a SACCO, but we felt that this particular case would be important in the context of SACCO. And for this particular case, the issue before court was whether Coop Bank should pay an amount of 6.1 million for excess tax on total fees and commissions for the period 2013 to 2015, as the bank had listed in their financial statements. And according to the bank, the moratorium as interchange commissions, yeah, and Coop Bank was saying that excess duty is not payable on those fees, on the basis that those charges fell under the category of interest, and they were actually arguing that according to the definition of interest, yeah, it includes all charges incidental to advancing in a loan or credit facilities by financial institutions. So Coop Bank was relying on the interpretation of what constitutes interest, and they were saying everything that pertains to loans, be it charges, be it commissions, should be included as part of interest, which is exempt from excess duty. And in the court's determination, the tribunal agreed with that definition by Coop Bank, and they further made reference to the income tax, which defines interest as interest payable in any manner in respect of a loan, a deposit, a debt, a claim, or other right or obligation, and includes any premium or discount by way of interest and a commitment or service fee paid in respect to any loan or credit facility. So in a nutshell, the tribunal felt that charges that are related to loans should all be categorized as interest. No matter how you word them, you may decide to word them as commissions, you may decide to add them as loan processing fees, but all those charges should actually be defined as interest and therefore not subject to excise duty. So the important notes from this ruling is that all charges incidental to advancing in a loan, as I said, by financial institutions to their customers constitutes interest and hence exempt from excise duty. And since there was an ambiguity in law, especially on that, the court also said that when the law is unclear, it can only be interpreted in the favor of a taxpayer. So this was also another very important aspect of this ruling, because we're saying that if there is a certain legal provision which does not have a lot of clarity, in interpretation, you must give an interpretation that favors the taxpayer. Because remember, the taxpayer is not the author of the law. The law is authored by the tax authorities and in liaison with other government agencies. And therefore, the taxpayers should not suffer due to that ambiguity. So that was also a very important point that came out of that ruling. If we can go to the next ruling, it was between Sharia SACCOs Sat Limited versus KRA. And this was over non-payment of income tax amounting to around 8.1 million on interest from FOSA for the years 2011 to 2012. The other income in the context is that income that is earned from loans that are advanced to members, also known as FOSA activities. And according to KRA, those FOSA activities are actually not exempt from tax. So, of course, Sharia SACCO was not in agreement, and they filed appeal, claiming that that income that KRA was subjected to tax was strictly from loans that were advanced to members of the SACCO and therefore exempt from taxation. However, during the court determination, the court felt that Sharia SACCO did not provide a very clear distinction between BOSA and FOSA loans advanced, and also the parameters or factors informing the two separate categories of loans. And it was incumbent on Sharia SACCO to demonstrate that all FOSA loans advanced in the year were strictly and exclusively advanced to specific members. According to the court, the SACCO was unable to show that. They were unable to discharge the burden of proof as required by the Tax Act. The dividends were not supposed to be subjected to further taxation on the SACCO. So this was obviously in favor of Tembo SACCO. On the issue of deduction of expenses, the tribunal found that the Income Tax Act does not list non-deductible expenses incurred in wholly in the production of 50% interest income. In other words, they say that the law does not say that for the 50% interest income, a SACCO cannot deduct expenses. So that is to say that all these expenses that have been fully and wholly incurred in generation of income, those expenses can actually be deducted as allowable expenses under the income tax. So the notes from that ruling is that one, dividends could actually be taxed either as business income or dividend income, but in the context of SACCOs, that income needs to be treated as qualifying dividends, and the 5% deducted is actually final. And that expenses, the second thing that we need to learn is that the expenses wholly incurred in the generation of interest income from non-members or other incomes is fully deductible for tax purposes, as long as those expenses can be fully supported. In the fourth case, sorry, it was between Moramati SACCO and KRA, and the dispute revolves around certain incomes which had not been declared by Moramati SACCO in the years 2004 and 2005. And the contentious issue was whether or not that income was supposed to be subjected to taxation or it was exempted under Section 19A of the income tax. And in this particular case, the court found itself in agreement with KRA that not all the income that has been generated by a cooperative society could be deemed to be for the mutual benefit of its members, and therefore not all income is actually exempt from taxation. And according to the court, they say that it was clear that the SACCO was carrying on business or providing services that were within what was contemplated under Section 3(2) A1 of the Income Tax Act as taxable. Remember, so in that particular category, in that particular provision, it talks about other incomes which are subject to taxation. And in a nutshell, the court found that it was not correct for the SACCO to purport that income from social services should not be subjected to taxation, especially when those services are to non-members. So that particular appeal was actually thrown out or dismissed for lack of merit. And the last case that we also felt was important for you to was between Hazina SACCO and KRA. The commissions on top-up loans should be exempted under the provision of Section 19A, 4A. That is whether dividends and commissions earned by SACCOs should be subject to tax or should be exempted. That was a dispute. And since the income as commission in the records, or rather, Hazina had recorded the income as commission in the records, whereas they had categorized it as income. It followed that the dividends, or rather the dividends and the commissions, should have been treated as other income which was subject to taxation. And the court ruled that it was satisfied with the KRA argument and therefore dismissed the appeal. So again, these top-ups, and remember, this is not for purposes of excise tax, it's for purposes of income tax. And the law was, or the tribunal, the court was pronouncing itself and saying that these other charges, these other incomes the SACCOs earn are actually subject to taxation, of course, observing the provisions of Section 19A of the Income Tax Act, as well as other legal provisions bearing the same. So I think that's all, especially on the litigations. We didn't want to burden you with a lot of cases, but at least from those 5 cases, you can see the precedents that have been formed by the courts and how you should be able to look at your different tax issues as provisions that guides the taxation of SACCOs. So
there's someone called Robert Kiru. He wanted to know, you clarify on VAT. He's saying that the VAT rate is 14%. So he's asking, do I pay to the supplier or I retain and file 6% and pay a percent so that we assist KRA in taking the taxes? So this is, I believe he's talking about in the place whereby they are appointed tax agent. So he's just asking, if a company is appointed tax agent, do they retain, whereby the new rate now we're talking about VAT is 14%, does he file, retain 6% and pay the supplier 8%? Maybe you can just answer that question.
Okay, so thank you so much, Robert, for that question. So regarding VAT, yes, the rate is now 40%. And if you're an unappointed withholding tax or withholding VAT agent, you are actually required to retain 2%, no 6%. It used to be 6%, but now it has been reduced to 2%. So you're required to withhold 2% of the VAT and remit that to KRA, so that now the supplier can be able to claim it and also declare the rest and pay. So, but then again, you can only do that if you have been appointed a VAT withholding agent. It's not for everybody, and I think that's one of the things that I wanted to make it very clear, that it's not everybody who is required to withhold, but as long as you are appointed as a VAT withholding agent, you can withhold 2% and remit the rest to KRA. Yeah.
Okay. Thank you, Peter.
Yes, you can hear me.
Yes.
Another question is on digital service tax. Asking on digital service tax, is it additional tax to excise duty?
All right, so thank you for that question. I want Erastus to address it, if Erastus is online.
Thank you, Peter. DST, digital service, governed by different acts, so they're independent of each other, unless it's by saying additional as an obligation, then it will be as an obligation, but it will be governed by the income tax and on.
Yes, I think we seem to have lost Erastus, but what he's saying is that those two taxes
that it will interact
independent.
with.
Yeah, I think we seem to have lost you, Erastus. Saying that tax heads, and therefore they're independent of each other, and it therefore follows that DST could be an additional form of taxation that SACCOs used to be allowed. So maybe you can proceed with your questions.
So the next question is in regards to digital service tax, should share purchase them as members' deposit?
Yeah. You can address Erastus?
Yes. In this scenario, usually, normally oral case scenario, in order to be a member, maybe there is some shares that you are supposed to make a payment for. So I wouldn't say more or less they are different but the same. But with regard to DST, the issue here, it will be regarding the platform under which the same is executed. It's not about how similar they are. So ST will come in.
Next question. With regards to withholding agency, how do you deal with suppliers who are not registered with KRA, especially on training?
Mary, sorry I didn't get that question correctly. Probably you can repeat it again.
Repeat again.
Mary, please repeat the question.
Peter, with regards to withholding agency, how do you deal with suppliers who are not registered with KRA, especially on training?
Okay. Thank you. I think it's expected that everybody has a KRA PIN, and that's the only document that you need when doing withholding tax. There might be very few isolated cases of individuals, especially those who are not registered with KRA, but very rarely. But you don't need any other form of registration. That's the only threshold that is required. And in instances whereby that person has not been, or rather doesn't have a PIN, then it's incumbent on you to tell him to go and register first before you transact with him. Yeah. So, but it's expected that everybody has a KRA PIN, and in fact, I'm told nowadays you cannot even open a bank account without a KRA PIN. Yeah. So that's the only document that you need.
Next question. You clarify on how you can treat dividends as business income or dividend income and the taxation of the same.
Okay, thank you again for that question. As we saw from the litigations, it sort of has two ways of looking at dividends. But then again, the treatment will depend on whether the dividends are actually qualifying or non-qualifying. By qualifying, we mean that withholding tax that has been deducted is final, and that income should not be subjected to taxation, to any further taxation. But then, if you receive those dividends from, let's say, another cooperative, okay, in that case, the dividends will not be qualifying, and you'll be required to list the income together with your other incomes and subject it to corporate tax. Of course, you'll also be given an opportunity to withhold or rather to claim the withholding tax deducted so that you only now pay the net amount. So that's how you look at the two categories, or how you differentiate qualifying and non-qualifying dividends.
Next question. With regards to the case studies, somebody is asking, is it in order to name in processing loans as interest and therefore avoid operation tax on them?
I think
Peter, you've gotten the question?
Yes, I think I have. According to those litigations, remember we said that loan charges are the reason why we classify them as interest is not for purposes of corporate tax, or rather to avoid corporate tax, but to avoid excise duty. Yeah, and I think that's a very important question that has been asked. So we don't differentiate so that we can avoid paying corporate tax, but it's so that we can avoid paying excise duty unnecessarily. And in the case between KRA and Cooperative Bank, the court said that charges that are related to loans cannot be subjected to excess duty because they need to be interpreted as if they are interest, and therefore just subject to corporation tax. So I hope that point is now clear.
I think we've exhausted the questions.
Yeah.
Okay.
All right.
Thank you so much, Mary and Peter, for handling those queries.